What's up, guys? Happy Friday. I know the video's late. Sorry, I'm lazy. Sorry, I was trying to record and roommate's dog busted through the door. So it was really cute. She does it again. It's fine. Um, anyway, let's look and see how we did. So today we are down about 62 bucks. Oh no, looks like I need to sell out of all my stocks. Not really, it's fine. Remember, short term doesn't matter. So for today, we're down about 62, 63 bucks. For the week, we're down 95. Month, we are down. Again, not a big deal. 153. 3 month mark, we're still up. So see, long term, we're still fine. Um, Up about 1600. Year, we're up 25. And all time, we're up 23. So still not doing too bad. Again, short term loss does not bother me at all. Red days just means that there's opportunity in the market. And another thing, keep in mind, when you see it red, that means it's down for the day, not down for your portfolio. So, like, the price that it opened at is different than my average price. So, I'm technically not down that far versus where the market is. So, like, the differentiation in the price doesn't necessarily mean that I'm down. So, like, if if the stock started at, say, 52 or $50 today and it went down to 48, well, if I bought it at 45, I'm still up $3. See, so I'm still not that worried. So let's take a look at the individual stocks. Let's take a look and see who's down. So 98 shares of Altria, 45, 30% of the portfolio, down $6 today, up 560. See what I mean? Nothing to worry about. Coca-Cola, 17 shares, 51.10 average price, 5.72% of the portfolio, up a dollar, up 98 for the long term. AT&T, this one's still, I just wish it would go back down. See, still wanted to go lower. 62 shares, 32.10 the average price, $20 up today, up 45 long term. Again, not a big deal. AbbVie 88, that one dropped. Awesome. It dropped a dollar a share. So that's where I'm down $60. See, it's one stock. 60 shares at 72.22. Again, still up, what, at least 10, $16 a share. So down 75 from where it opened today, but I'm still up $946 or 21%. Not worried about it. SKT 1537, 5 shares, 1529 is my average price. Therefore, I am down 20 cents today, but up 38 cents long term. WBA 1 share at 40 or 5460.3% of the portfolio, down 3 cents for today, down 21 cents for the long term. That is one that I do need to add to, as well as SKT. ExxonMobil down, of course, this one's always down for me. So it's 29 shares, 73.50. I bought it too high, but that's okay. Today's returns $7.54 in the negative. Total, we're down $150. Still not super duper worried. And then we have Target, which they've come way down. This is actually really good, but still not low enough for me personally. I had somebody ask me about Target the other day, and I'm like, it might be a good position because, as you guys can see, even over the month chart, it like went from $130 down to 116. So it's only $15 down, but it's still coming down back to earth, which is pretty good for investors. I still wouldn't buy it here, and you'll see why. So I have 10 shares, 87.68. So I'm still going to be going about $20 a share if I buy Target right now. So that's why I'm not buying it. But for somebody who's initiating a position, the initial position doesn't really matter. It's just I've started getting more of a position in Target, so I don't want to boost it up that much. But if you're starting, it really doesn't matter. You can just buy it lower than this price and cost down average. Once you have your average cost like set, you don't really want to boost it up that much. Like if it was $1 or something like that, maybe $2, I wouldn't be too worried about it. But $20 is a lot for one share. That's let's say you go to the store and you look at a thing of Oreo cookies, just because I have some sitting here. Let's say they were $3 one day, and then you go and you have the next day they're sold for $6. You're not gonna buy the Oreo cookies because you're like, what the hell? They were $3 cheaper yesterday. See what I mean? So if I could buy it at a discounted rate of 87, or actually really a fair value of 87, because that's kind of mid ground. That's still not even low. That's like right in the middle of their price. So I won't be adding here, but I do love Target. But for today, we're up $6, and total we're up almost 300. So still a 33% return on that stock. Cannot complain about it. And I pretty much cleaned out the watch list. So I still have O Realty. I have Genuine Parts, Federal Realty Trust, PepsiCo, Kimberly-Clark, and Illinois Toolworks. Then for 2 I have that's for one. I have GPC, FRT, PEP, Kimberly-Clark, and you'll learn who it works. And then for February, I have Starbucks, Lowe's, Procter and Gamble, American Express, and then for 3, I have American States Water, Waste Management, IBM, Travelers, Johnson and Johnson, 3M, and McDonald's. So I'm heavy in 3, 6, 9, 12, but that is because that's my lowest paying month right now. So, and they just have a lot of good quality companies, right? So if you look at it, and then of course we have O Realty, but that pays every month, so I didn't include it in the month breakdown. But that's what I'm planning on buying for the next month with the AbbVie and the AT&T dividend. Excuse me. But I shortened my list. So you have a king, 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 um, and then there's Starbucks, and then you have a king, I believe an aristocrat, a king, I believe another aristocrat. If not, I think Waste Management is getting close. IBM is close to aristocrat status. Travelers, I don't think is close at all. Then you have a king, and I believe an aristocrat. If not, it should be. I think McDonald's is getting close if it's not. So I just shortened the watch list. I got rid of a lot of the clutter, and I want to keep it like this. I know day-to-day change. Sorry, guys. I know I said I wasn't going to be doing that, but I really want to keep it focused, and I think that these stocks are great picks. And to be honest, with the Warren Buffett theory, I don't even have to be right about all of them, right? So I'm gonna have 1, 2, 3, 4, 5, 6, 7, 8. Right, 1, 2, 3, 4, 5, 6, 7, 8 total in my portfolio right now. So I'll have 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25 stocks. That's fair. And honestly, if I was picking pillars, currently I would have Coca-Cola and Kimberly Clark. And then for 2, I would have Lowe's and Procter and Gamble. And then for 3, I'd be picking Johnson and Johnson and probably Waste Management or McDonald's. So I have ones that I'm gonna want to have a bigger position versus the other ones, but I still want those high quality companies in my portfolio. So I did do some switches to the watch list. I just wanted to make it less cluttered. I had about 30, I believe it was 25 to 30 stocks total for my goal for my portfolio, and I wanted to trim the fat a little bit because I don't need all those companies. So I'm just picking aristocrat, contenders, or kings, and that's really my investment thesis. So trying to buy good companies that will increase their dividend over time, so then the compound effect is a lot more substantial. So overall, guys, again, like I said, I've said it at almost every video. I'm sure you're sick and tired of me saying it. Broken record, I know, but don't worry about this. This is fine. Red in, even in the 3-month category, even honestly in the year, if you have this, if the stock market is down, you have, so Buffett's theology is that, or thesis is that if there's blood in the streets, then you need to buy up. If people are panicking, that's the time to buy. Don't buy stocks when everything is green. When the glitter is gold, it's too good to be true, right? When the glitter turns out that that it's just flaky powder and it's kind of sparkly, doesn't mean it's gold, then you buy. Sorry, bad analogy, but you know what I mean. So I'm gonna be a lot more stern about the stocks that I pick. Honestly, I'm gonna try to be less focused on one position because I'll show you the equity and I'll show you what I mean real quick. So the equity here, I am very much over percent. Like I have too much of a percentage in Altria and in AbbVie, but that's because I bought them low, and I did still have a position to put it more into Altria, so I doubled up on Altria stock, which is fine. So the goal now is to keep reinvesting into those companies as long as they're fairly valued, which AT&T and AbbVie, as you saw earlier, for me are not. So I will be buying something else, as in maybe O Realty. With $102, I could also buy something like Starbucks or American States Water. All of those I would be happy holding. So I'm stricter on my watch list. I'm down for the day. Or let me redo that. I'm down for the day. Not a big deal. I'm a long-term investor. I really don't care. I have great, strong companies that I'd love to buy any of them. And I'm going to keep reinvesting as long as the stocks are at a price where I'm comfortable. And right now, for February, I'm not. The stocks are too expensive for me personally with my average cost. So, and I'm trying to lower my positions in that. So I'm going to build up other positions so those get smaller and they're not such a huge portion of my portfolio. Like that's a lot. That's like 60% of my portfolio, or like think it's 55% of my portfolio, over half is in Avi and Altria, and that's not what I want. So I'm not going to sell out of those positions because they're healthy positions. I love the dividends. I'm just going to grow other positions to shrink them. So that way my portfolio gets a little bit more balanced. So down for the day, not worried about it. Long-term mindset. I have a trimmed watch list, and I hope you guys are excited because the portfolio is going to grow like crazy. So thank you guys so much for watching. Remember to spend that dividend guy. Remember to hit the subscribe button, and when you do, hit the notification bell so you don't miss any content. I post Monday through Friday with dividend videos just like this. And I try to get a video out on the weekends, but I don't guarantee that because like I have family stuff and hang out with friends and stuff like that on the weekends. So I might not make time for it, but I am very strict on my Monday through Friday. So if you want good weekly content, a Monday through Friday update on a great dividend portfolio and to get some insight on some investments and possible new investments that you haven't researched, hit subscribe. I'd love for you to join the movement, and thank you guys so much for the growth. I've gotten like 15 subscribers in like 10 days, and we hit over 6,000 views. It's phenomenal, and I've only been on YouTube since like October, I think, or November, so it hasn't been long. So thank you guys so much for watching. Remember that I'll have a new video on Monday, and I'll see you guys then, okay? Take care.